Welcome, my friends, to another edition of the Heritage Wealth Planning YouTube channel. Today, we're going to talk about tax rates on retirees for residents in the state of Colorado. All right, so let's get right into it because Colorado is in flux for sure from the more old Western state from the days gone by to a more California brother-in-law, if you will. It'll be interesting to see how Colorado shakes out relative to taxes, especially for retirees in particular. Make sure my mic is adjusted there. So let's start as our want. We're going to go to the Kiplinger state-by-state guide to taxes on retirees. As you see, I have California up there. So the next state in our series is CA to CO, which would be Colorado. So let's give a look at what the great state of Colorado is doing here. It'll be interesting to find out. Now, as we go into this, I'm still amazed that California was not nearly as prohibitive as what we had thought. Arizona is more so than I had thought. All right, let me click on that. Again, now Arizona isn't worse or better than California. I'm just saying from my own perspective, living here in Georgia and not residing in either of those states, I had assumed California would be off the charts and Arizona be more of the freedom-loving tax state, and it wasn't quite as strict as either of those assumptions played out. So it's interesting. So let's see about Colorado. Colorado's a mixed tax picture, so right in the half of this. So you got 5 quintiles, and Colorado fits right in the third. So not too great, not too bad. Taxpayers 55 and older get a generous retirement income exclusion from state taxes, which is good. That's what we want to see. And it gets better when they reach the age of 65. But Centennial state sales taxes, which also have a local component, are on the high side and can go as high as 11%. So that was where California got us hard, was on the sales tax. If I recall correctly, I think Arizona as well. So these Western states might not tax you as much on the income side, but they're certainly getting on the state side or the sales tax side. Seniors may qualify for a homestead exemption of up to 50% of the first $200,000 of property value. So if you got a $200,000 home, you can write the first $100,000 off on the assessed value. See, they don't talk about assessed or appraised. I got to think assessed. That's what the county does. The county assesses it. The appraised value is what you do when you're getting ready to sell it or refinance. So I'm just going to go with assessed value from now on. I'm sure that's the case. So if you have a $200,000 assessed value in the county you live in, if you're a senior, and we're going to have to define what a senior is, presumably someone over age of 65, you only have to pay taxes on the first $100,000 or the second $100,000 of assessed value. So that's a big deal. State sales tax is only 2.9% on the state side, but localities can add as much as 8.3%. That's pretty significant. And the average combined rate is 7.5%, which that doesn't seem horribly high. I mean, it's high, don't get me wrong, but let's see what else they say about that. I've seen others that are significantly higher. Income tax, all Colorado residents pay a federal taxable income flat rate of 4.6%. And taxpayers are also subject to a state AMT, alternative minimum tax. AMT drives me crazy. Social Security for beneficiaries under 65, up to $20,000 of benefits can be excluded, along with other retirement income. So this will be interesting to see what they say with other retirement income. Those 65 and older can exclude benefits and other retirement income of $24,000. So once you hit 65 and you're on Medicare, you can exclude all your Social Security and retirement income of $24,000. So let's park that to the side and come back to that. That's pretty interesting. Also, Social Security income not taxed by the feds is not added back to the AGI for state income tax purposes. Well, that makes sense. So if the feds aren't taxing it, Colorado's not going to tax it either. Exemptions for other retirement income. Pension annuity subtraction. Taxpayers 55 to 64 can exclude a total of up to $20,000 of Social Security, state and local pensions, federal pensions, military pensions, and private pensions. All right, so if you have a pension and you're between the ages of 55 and 64, you can exclude up to $20,000 of Social Security and your pension from taxable income. Those 65 and older can exclude up to $24,000 from the same pension program on top of the Social Security. All out-of-state government pensions qualify for the pension exemption. So there you go. So if you retired from California to Colorado, you could exclude up to $24,000 of your pension plus all your Social Security. And again, the railroad. IRAs qualifies for exemption of up to $20,000 or up to $24,000, depending on your age. Yeah, so if you're under the age of 65, it's $20,000. If you're over the age of 65, it's $24,000 plus Social Security. So let me just be clear here. If you're in Colorado and you're under the age of 64, you can write off $20,000 of retirement income, be it pensions or Social Security, not IRA distributions, by the way. Oh, yes, it is IRA distributions. Okay, there you go. So if you're under the age of 64, you can write off $20,000 of your retirement income, which includes IRA distributions. Once you're over 65 years old, you can write off all your Social Security and up to $24,000 of IRA and pension income as well. So that's a pretty significant deal there, my friends. I'm a fan of that. Same thing, 401ks and other defined contribution plans qualify for the same rules as the IRAs. Same with public pensions. The median tax on Colorado's median home value of $247,000 is $1,500. And I, again, don't have my calculator here. That's pretty low. So if the median property value in Colorado is roughly $250,000, your median tax on that is $1,500. That's not too shabby, my friends. Tax breaks for seniors, we just talked about that. At least 65 years old, you can exempt 50% of the first $200,000 of actual value of a primary residence, i.e., $100,000 of assessed value. The state pays the tax on the exempted value. So the state is actually going to pay the tax to the localities, which is just odd. The person must have owned and lived in the home for at least 10 years. Wow. Okay. So they're definitely not giving new residents a tax reduction there. So if you just moved there from California last year, you're still paying the full brunt of your property tax. The exemption is also available to qualified disabled veterans, senior citizens. Veterans may qualify to defer their property tax. Again, the whole thing with deferring, they don't go into that. I don't understand what that deferring it, what it means, because what are you deferring it to? You're paying it. Surviving spouse, 58 may qualify for the property tax, rent, heat rebate, and a property tax deferral. If they're single taxable income or single income, I don't know if that's taxable or not, it's $13,000, or if you're married, it's for $17,000. So I don't think many people are going to qualify for that. At least people are probably not watching this video. Qualified applicants can receive a rebate up to $600 of the property tax and $192 of their heating expenses paid during the year. And again, qualified, you really can't be making much money. And that's just your income. And I don't know if that's gross or taxable. Pretty significant distinction there. I don't know. Hard to imagine that many people are going to be getting that, though, for sure. Vehicle taxes and ownership tax is assessed on the original taxable value of your taxable value and year of service. Original taxable value is 85% of the sticker price, and rates are set at the county level. So that could be pretty significant there. If it's 85%, that's $17,000, right, on a $20,000 vehicle. Whatever the county decides is the rate is the tax you pay. No inheritance or estate tax. All right, so let's go over here to the Tax Foundation, see what they have to say about Colorado. Very confusing tax law there for sure. While I bring that up, I'm gonna drink of my coffee. All right, let's see the good. All right, so Tax Foundation, top individual tax rate is 4.63, but you factor in the state and local tax burden, it's 8.9, and so it's in the bottom third. And again, that's good. We want this. We don't want to be in the top 20 there. We want to be in the bottom. And then their tax freedom day is April 24th, and that ranks 37. So that's lower, which is good. That's still pretty high on tax. Look at that, state and local tax burden 8.9%, and April 24th is tax freedom day. So certainly not horrific, but at the end of the day, it's still almost 9%. Let's go to property taxes. Property taxes paid as percentage that's pretty low right there. 40 rank of 43. That's again the lower the better. You're only paying 1/2 of 1%, a little bit more than that. That's not too shabby. Now, state and local property tax collections per capita. Again, you got to keep in mind this is because it costs more to live out west, which is weird when you think about it. Because like Arizona, Utah, Colorado, tons of open spaces, but just not that many houses being built. And the reason is because the feds own it all. I mean, the feds have these huge ownership stakes in the property out there. So the land is actually limited that can be developed and built. So because of that, the housing is in high demand. It's just expensive for housing out there. So in this case, even though you have a low property tax percentage, because the value of your home is so high, relatively speaking to the rest of the country, you're going to be in a pretty high tax state from a dollar percentage. So you can have the two differentiating things, low percentage, but high actual dollars here. And that ranks smack dab in the middle of the U.S. for taxes on property. Sales tax is the big one here. So look at this. So the state sales tax is low. It's only 45. It's in the bottom fifth, actually, bottom 5 states at 2.9. But the average locals tax is 4.62 for combined is 7.5. And that's pretty high. So that's in the top 20, and that's where they get you on state sales tax. Cigarette taxes and gas. Oh, that's not bad. Gas tax only 22%. Cigarette tax is pretty low too. So if you smoke and you drive, Colorado is not going to be horrifically expensive. State sales tax is not bad. From a state sales tax perspective, it's really your locality. The locality is what eats you alive there. So by and large, Colorado is not too bad. Property taxes are pretty low from a percentage base. You can get some reductions if you're a senior citizen, but again, you've had to live there for 10 years. $1,500 on a $2,500, $250,000 property, that's not too shabby. Even though, that $1,500 might seem high relative to a lot of other states, it's still smack dab in the middle of the U.S. Factor in that with a low state sales tax, you can decide what county you want to relocate to lower your county sales tax and eliminate some of that. So I'm a fan of this. I like the fact property tax is low. As I've said before, I'd rather you live in a state with low property taxes and higher income taxes, if you had to choose between the two, than one with high property taxes and low income tax. Because income taxes you can manipulate pretty easily by just doing some planning. Can't really do that with property taxes, that's for sure. And then sales tax is, again, you'd like to watch out with sales, but sales tax, it's a user tax. If you don't want to buy the good, you're not going to pay the tax. That's all there is to it. If you want to buy the good, you're going to pay the tax. So it's completely up to you how much tax you pay. And if you go to a county that's lower from a sales tax perspective, you're going to pay less. That's all there is to it. And finally, from an individual tax, that's 8.9. It's just not that bad. Again, it sounds bad, but it's not horrific when it comes to overall scheme of things. And if you do some planning, you can reduce that quite a bit in terms of having Roth IRAs. If the bulk of your assets are in pensions, you get income from pensions, and you're over 65 and Social Security, Roth IRAs, this will be minimal at best. So let's go to SmartAsset.com, and I'll tell you what I'm talking about here. We're going to hit Colorado because they got that to use. Overview of retirement tax friendliness. Colorado's income tax, just like I said, allows for a rather large deduction on all retirement income. Again, so while the income tax as a percentage seemed high, you got to watch what you're actually doing because it might not be at all. It just seems high from afar. But if you start getting close into that, you might be surprised. Same with California. Sales tax is relatively high, but food and medicine are exempt, and that's big. We want food in particular because you're going to spend a lot on food. And property taxes are among the lowest in the U.S. So, that's not a bad thing. So let's go back to the calculator we use. $25,000 Social Security, $25,000 of retirement income. We're married, filing jointly, and we're born in 1953. Let's see what we get. So look at that, my friends. $93. That's all you're going to pay in Colorado state tax. $93 on $50,000. That's what I'm talking about. There's ways you can manipulate the Social Security system, the IRA distribution planning, to pay essentially nothing on $50,000 of income. Add that with incredibly low property tax, and then you have ability to control your state tax. That's pretty favorable for sure. Just curious, what if we add a pension here, say $12,000? All right, so now I just added a pension of $12,000, a private pension, and what happened to it? And our tax, wow, so $12,000 pension increased our taxes by what? We'll just say it's $550. That's about 5%. So that really hit us hard. And the reason for that is because we only get $24,000 we get to write off, and then we got to pay taxes on anything above $24,000. So we got to pay tax on nothing here, but then we got to pay tax on $1,000 here plus $12,000. So we have a taxable income of $13,000 at roughly, was that 4.95% or was it 8.9%? I can't remember. But anyway, that's how they get you. So at the end of the day, they're only taxing you on this plus $1,000 there because you get the $24,000 write-offs. I'm just curious. What if we do this? What if we say we have $50,000 of Social Security and we got nothing there? Watch the difference. So we got $12,000 pension. I bet it's nothing. 60. So there it is. I know I'm wrong. So they don't, that's weird. They don't write off all of your Social Security like we initially were thought to believe because you're born here in 1953. What? Let me just do something here real quick. Let's have you born in 1950. Okay. Yeah, so they don't, that $24,000 is applicable. I tell you what, bear with me just a second, my friends. Let me get rid of this. This is interesting to me. So now all you guys, $50,000 of Social Security income. Why do we still have to pay tax on that? Married filing jointly. So I don't think their Social Security income is fully exempt from taxation. Not in the least. So now, this is where planning comes in though, my friends. So let's do this. We're going to do 40,000 there and 12,000. Let's do 24,000 here and see what it says. I bet we're still going to have something. Yeah, look at that. That's interesting. So let's do this. 12,000. I'll tell you what. Let's do 24,000 here. So now, remember, we think that Colorado gives us 24,000 of IRA distributions tax-free. So it's still, so basically it's 24,000 plus some amount of Social Security gets taxed. All right, so let's go down to 32,000. Is it? Yeah, 32,000 puts us on the where we don't have any minimal taxes on Social Security. That's weird. So I don't know if I'm liking what I'm seeing here regarding how they're calculating this in terms of taxes, because it does not indicate to me at all that Social Security is not tax-free. I'm going to try one other thing, my friends, and then we'll be done here. We're going to do 55,000. Okay, yeah. So basically, the best plan of action, if you're going to live in Colorado, is 25,000 there, 25,000 there, and let's do 5,000 here, and let's see what we got. All right. So the best plan of action really is not to have any pension. Do one other thing: $30,000 of Social Security, 25,000 retirement income. Yeah. All right. So if you just had your best plan of action is going to be about 25,000 in retirement income, 25,000 in Social Security, and you're going to only pay $93 in taxes. Let me just do one other thing: 24,000. Oops. There we go. Yeah. Okay. There you go. So basically, they're taxing a portion of this. I don't get why that is, but all right, at the end of the day, that's $49,000, my friends, and you're only paying $46 in taxes. That's pretty good. So given the low property taxes, given the IRA distribution, pretty significant deductions. I mean, even at the end of the day, if you had, let's say 30,000 here and you 30 and you had $12,000 pension. So now we got, we have an income of $67,000. I'm paying less than $1,000. That's not too shabby. So there you go. That's Colorado for you. I'm moderately surprised actually that Colorado is still pretty friendly in that regard. Again, this is for middle class earners. Now, if you're high income, I don't know. My presumption is that it's a flat tax. So I imagine you're just going to pay more because it's flat and you have the same amount of deductions as a regular middle class person does. But if you're moderately, just a good middle class person with IRA distribution, Social Security income, it's a pretty good chance you're not going to pay that much in taxes in the state of Colorado. So hope this helps. As always, thumbs up are always helpful. Don't forget to subscribe down below. down below. I think it's right there or it's right there. I can never quite remember when I'm pointing. I'm pointing to my right now. That's probably your left. So it's right there, that little button that says subscribe. Sorry about my fingernails. I do a lot of planting, so if they look dirty, because I'm always out there putting something in the ground. And then don't forget to hit the notification bell down there as well. Comments always welcome. Comments always welcome. If you live in Colorado or considering going there, share with us your thoughts, questions, concerns. Love to hear them and love to share them with the rest of the crew that watches this. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.